Okay, talking about volatility, let me go back to the ringgit. I remember the days when the ringgit used to trade 250 to the US dollars, right? I'm sure a lot of us who are old enough can remember that. Maybe the Gen Y among us can't. And then we had the Asian financial crisis, and we got used to, first the peg of 380, then when the peg was removed, we got used to 3 ringgit, 330 to the US dollar. And now this is such a shock to us, right? To move away from that 3 ringgit, 320, 330 kind of level to beyond 4 ringgit. Now, Esther, you're managing fixed income, and you monitor the currencies quite closely. Do we now have to be faced with a new normal, which is that we have to get used to a ringgit of around 4 something to the US dollar?
Yes, indeed, it has been a roller coaster ride for the ringgit over the years, and especially so this year. Over the last 12 months or so, we have seen that US dollar has been king. It has been a one-way bet. Why? Because the US Fed is supposed to hike interest rates. They have guided the market since last year that the growth in US is strong. They are ready to hike from the 0% interest rates. And that has driven US dollar to be on the stronger side against almost all currencies. I think we have a chart to show in the first chart on page 36 that over the last 12 months, in fact, a lot of currencies depreciated against the US dollars, especially so in emerging market currencies, and ringgit wasn't spared, right? And coupled with that, of course, we have the domestic political issue that has also driven a lot more bearishness on the ringgit. So I think the question now is, where is ringgit going to go from here? I think when the ringgit hit 380 and beyond, when it went above 380, there has been a lot of panic because that was the previous peg level during the Asian financial crisis. And I remember when it hit 380 that day, even some of my friends called me and asked, hey, should I be taking money out? Are we going to continue to see that ringgit depreciation? And yes, since the ringgit hit 380, we have seen a sharp depreciation all the way to 440, 445. There's a lot of reasons that happened, but a lot of that has to do with emerging market concern, the growth slowdown in China, the devaluation done by the PBOC in China in August, that also contributed to the weak ringgit. And of course, the oil price is another major factor, as our ringgit is very highly correlated with the commodity prices. So now, do we need to contend with a new range of ringgit? I think the answer is yes. I think the answer is we are not going to see ringgit back to 3 to 330 in the near term, because we are faced in a very much more weaker growth environment in emerging markets, and especially also in Asia. And our view, like what Mr. Ting mentioned, is that there is a prolonged slowdown in growth led by China, and that would have impact on Asian countries like Malaysia. So over the longer term, we think that the ringgit would probably be stuck in a range about 4 to 4.3. Anything above 4.3, probably it looks a little bit oversold in terms of the fundamentals of the country. But as with all currency forecasts, we always look at currency forecasts, and it's probably the hardest to forecast. I remember when ECB in Europe launched QE, everybody expected the euro will go to 1, to the parity to the dollar. And yet now the euro is actually strengthening. So in the last 1 or 2 weeks or so since October, when the Fed did not hike interest rates in September, we have seen a reversal of currency movement. So on page 37, you can see that the US dollar actually weakened quite substantially against a lot of these emerging markets currencies, and the worst performing currencies like the ringgit and the rupiah has actually rebounded very strongly. So we also need to ask ourselves, what is going on? The volatility in the currency market is extreme. I remember on one day, we were trying to figure out where is the ringgit, and every hour that you ask our dealer, where's the ringgit, it seems to tell you, oh, it's at 440 now. 2 hours later, it's at 420. 1 hour later, 410. How could the ringgit move in such a huge intraday movement? It's not normal. And I think one of the key challenges that we see is that the liquidity in the market as well, that ringgit volume traded is very, very light, and that caused huge movement because everyone is positioned in the same way. So on the right chart, you can see that for this year, like I mentioned, everyone is overweight on developed markets, on US dollar, whereas everyone is positioned one way on the emerging market side, on commodity currencies or commodity assets. So when you have a reversal of risk appetite, we see huge movements in currencies.